Hey everyone. Today I'm going to talk about some of my SPAC experience and the new 21 Capital SPAC that has been recently launched with a lot of hype, a lot of anticipation. Let's get into it. So, what are SPACs? So, a SPAC is essentially a blank check company that helps bring private companies public. A lot of stuff needs to pencil out, a lot of stuff needs to get approved. There's several board meetings and shareholder votes before this happens, but essentially, the private company, they get their financials in order, they get their SEC documents in order. There's a lot of different things they need to do, and then there's a window. So once when they announce it, it could be 6 months to a year before they actually bring it public. Once when it's public, it's traded on the NASDAQ or stock exchange, just like anything else. And I'll be quite honest with you guys. Throughout my history investing in SPACs, almost every single time I've lost a lot of money. And so I'll get into that as well. I want to protect you guys from losing a lot of money or buying something that you don't know the underlying or the fundamentals as well as you should. So what are these? So institutional capital is often behind these things. And, the people behind this, they typically have a very large stake into the public company before it goes public. So what do you think they're going to do when they can bring it public? Well, they can finally sell their shares in their stock. So typically you'll see the price run up maybe for the first day. The next day you'll see it go down 10 to 20%, 10, 20%, and it's just a slow bleed down. It's been this thing for almost every SPAC I've been in. I've been in several SPACs, guys. It's one of those things where it's like, okay, Paul, have you learned your lesson yet? It's like, there's companies that I want to get exposure to, and I'll get into that here. But sometimes you're left in a gray area or a dark area when investing in these things. So, I've been in SPCE. That's Richard Branson's Virgin Galactic. That thing tanked after it went public. DKNG, that is DraftKings. That thing tanked when it went public. CCIV, that's Churchill Capital. That was Lucid. That thing tanked when it went public. Nikola as well. That thing tanked when it went public. And then the most recent one I bought into was Fold. And the thing is, I'm a really big fan of Fold. And I'll get into that in this video as well, or this podcast. So from my experience with each of these, and these tend to be really high-flying names. So there's a lot of excitement. There's a lot of buzz and talk about each of these. So they almost all ended 70 to 80% down or more. And it just has been a huge erosion of capital for me. The upside is, there is an avenue for these to go public with more ease. So like a lot of companies that can't go public the normal route where you go through the roadshow or you go through the typical process of going public. This is a good alternative. This is a great alternative actually, because you can just go public with a lot less red tape, but with less red tape can also come increased risk. So for example, you don't have crystal clarity necessarily on how many shares outstanding, what their market valuation will be when they go public. So when I was investing in Fold, for example, I thought they were going to go public on the NASDAQ with a valuation of 150 million. Well, lo and behold, I was very surprised when they went public, they were valued at over 450 million, more than 3 times the amount I was comfortable with. Well, eventually that stock fell, and it fell fast, and I lost. I didn't lose because I'm not selling, but my bags went down significantly. So unfortunately, there's not a lot of clarity when it's like while it's private, like versus when it goes public. Like there's not that clarity of what's going to be the valuation, what's going to be the shares outstanding, how much are the institutionals going to dump on the market, what's their time lock schedule where they can dump on the market. There's a lot of things like that where you got to be super, super careful. There's so much financial engineering that goes into these SPACs as well, like that more than meets the eye. Like from an arm length distance, you can see, oh, this is a great company with a great team. They're doing something that I really like. They're bringing products that I like. But like, what's the percentage of the insider allocation? Just like, look at it like a shitcoin. What's the percentage of the insider allocation? How much are they going to dilute? Same thing with the shitcoin. How much are they going to increase the tokens over the next couple of years? It's essentially shitcoining on Bitcoin, in my view. So there's a lot of these things that you got to think about, and it's much deeper than just seeing something high flying and buying into it. That's not to say you can't buy into it and make a ton of money. I know a lot of people that did make a ton of money. You know, it's one of those things. You sometimes you got to take a risk, right? But it's, you know, you got to know the valuation of what it's going to be when it's brought public, what the dilution is, and what the insiders are. What are the fundamentals of the asset too? Like, how much is the multiple to NAV to the asset that it's trading? Far too often I can see, you know, people not doing the math on this. And if the math doesn't math, eventually it's going to return to its intrinsic value. So these are really key and important questions that we need to answer to ourselves before signing into a SPAC. And I'll tell you guys, the euphoria, it always exceeds the diligence. I remember there was a point in time with, I think it was Lucid, where everyone thought that Lucid was going to outcompete Tesla. There's going to be more Lucids than Teslas, and it was a better version of Tesla. Well, now if you look at Lucid, you rarely see them on the road. I mean, they're still there, but they're not as frequent. What about DraftKings? Let's look at DraftKings. Ask yourselves this. How many sports betting apps are there that are public now? I mean, there's 6, 7, 8 companies that are public or more. And it's super easy to create another sports book. You know, and I'm looking at SPCE. They're doing great, but there's other companies doing much better, right? So, like, one of them would be Elon's company, SpaceX, right? So, like, the thing is this. You got to be careful in these environments. There's a reason they're going the SPAC route versus the traditional IPO route. I'm not trying to talk you guys out of making money. I'm just saying, look, I probably lost 20, 30 plus $1,000 over the past 5 years in SPACs. I know you'd be like, well, I'm not dumb like you, Paul. Well, listen, just please take my lessons and listen to those things I said when investing, because it's easy to lose a lot of money in the markets if you aren't informed on the investment in deep detail. So 21 Capital, I actually think it's going to be a strong net benefit to Bitcoin. They're going to try to find these different ways to optimize Bitcoin per share and develop Bitcoin financial products and lending models. Like, I think we're going to see a future where, you know, how we have the Mag 7 or the Magnificent 7 in the NASDAQ, we're going to see a future where we have a Bitcoin 10 or Bitcoin 20 or a Bitcoin 7, where Bitcoin-related companies, they will tend to outperform regular companies in terms of market cap because they have a stronger asset in their portfolio than the non-Bitcoin-related companies. So I think we're going to see a lot of this, and I think that this is a net benefit towards bringing more people into Bitcoin at the institutional level. But I don't think it helps the plebs as much. I don't think it helps the individuals like the farmer, the unbanked farmer in Africa. It doesn't help the, you know, the working mom in Honduras. It doesn't help any of those people. That's where Bitcoin helps them. This product here is going to help institutions who can't buy spot Bitcoin. It'll provide them another avenue for them to buy these products. So I think a lot of people are going to make a lot of money with this, including Jack Mallers, Brandon Lutnick, and a lot of those guys. I think SoftBank's going to make a ton. I think Cantor's going to make a ton. It's like a very strong team and a strong group of people. But I don't think it's for plebs. I don't think it's for Bitcoin, like Bitcoin maxis. For most Bitcoin maxis, you should just be buying spot Bitcoin at fair value and putting it in cold storage. I get that there's a lot of money and excitement, and I'll even say the word outright. I think there's some greed in the market. Like, people want to optimize their Bitcoin, and they want to do everything they can to sell exposure, and this is one way to do that. This is one way you can sell exposure to institutions that can't buy spot. So I think overall, I wanted to share my SPAC experience. They've mostly all led in failure. That doesn't mean to say that this won't. This could 10, 20x. I would be saying kudos to all the shareholders. I'm not going to buy it at these price points at a 3x MNAV. I don't think I'll buy it at a 2x MNAV. Maybe if I had like a retirement account or something in the traditional financial system, if I can get exposure around a 1 to 1.5 MNAV, I would consider doing that. But just be careful out there, guys. There's a lot of people chasing a lot of shiny objects. And this is the biggest thing. I wanted to say this really quick because I bought a lot of the miners back in the day and a lot of the companies that have the Bitcoin exposure. Just because a company buys Bitcoin does not make it a great investment. I'm going to say that again. Just because a company buys Bitcoin doesn't make it a great investment. Not everything that shines is gold. Not everything that is glitzy and is flashy and looks pretty is going to be a great return. Just keep that in mind, guys. Really, really, really try to keep that in mind, because at the end of the day, people are just trying to make money. And people will do whatever they can to make money, and they'll say the right buzzwords. And a lot of people will lose out, unfortunately. So just be careful and make sure you understand what you're investing in. And for most of us, especially myself, I'm just buying Bitcoin. And, if I buy some Tesla stock, for example, and then they have Bitcoin on their balance sheet because I like the company and they have Bitcoin, cool. That's a double win. I like the company. I know they're a great company and they hold Bitcoin, double win. Same thing with Rumble. I like the company. They hold some Bitcoin. That's a win. You can say it about all the Bitcoin treasury companies. So anyways, guys, you let me know what you think. Please click my links below if you can. Share it around. It means a lot. And I'll catch you guys in the next one.